Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. So, what would be the best plays from here? We're going to talk about that in today's video. Let's dive in.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in precedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
So Bob, as I was telling the guys in the room, if you look at the yearly chart on the S&P 500, basically we had like 3 years of consolidation and now we're breaking out of that in a naturally bullish, market. So things look like there's some upside to go before I think things start to turn for the worst. And the question is there anything out there that needs to play catch up, because Nvidia and all these other, kind of meme type plays have just really rocketed, and it seems like you're playing catch up. So what do you think is the best plays at this point?
Yeah, I think the great rotation's in. I think they literally put NVIDIA and SMCI and tech on the shelf here, Phil. And everything that's been undervalued is going to play catch up here. And it's going to look weird. The indexes aren't going to fly like you think they do, but there's going to be things under the covers that are going to absolutely rip. And the first chart I want to show you is the rotation that's happening, which is really interesting. This is totally a recession, drop your interest rate play here, is that the smart money is in blue, the dumb money is in black. And if you notice, real estate and utilities is where they're bidding in the market, because that's a classic. Hey, they're going to drop interest rates. Real estates is going to be relatively highly valued. These are primarily REITs in this. And then on tech, they're bailing out of tech so fast it can make your head spin. And if you look at what the big boys are doing, they're dumping their tech holdings like crazy. And NVIDIA and SMCI, it's like a light switch went off. They're done playing with those. And they're turning around, and I think they found some new toys, Phil. And I want to throw some charts up at you. First one is going to be Bitcoin. And you can opine on Bitcoin because you're more of an expert than I am. I'm looking straight at fib moves here. And I think it's probably a foregone conclusion that we're going to go ahead and we're going to probably hit that double top up there they put in last year. And then we may get that March pullback to form another handle before we just rip up into where my green arrow is, which is around, I think I have like 109 or something like that. I think you have a target around 117. You want to add some opinions here before I get to the next charts?
Well, you can almost make a case for a cup and handle here too, that if that measured move would be extremely high. But I think these fib extensions warrant a target, because the way I see it is that, the market, like I said, has broken out. Bitcoin, I think, is going to get a catch-up rally. And like you said, because of capital rotation, people will say, well, where does the money come for that? Because it's just going to be capital rotations. And the ETF flows are backing the idea that this thing is going to squeeze off here for one final move. And, if you go into the higher time frames, you could basically make wave counts that would agree with that. So, and then, lately the institutionals have been, especially like JP Morgan, they've been flipping bullish now. So, which probably tells you that they're loaded, even though they've been poo-pooing the price to try to keep it down as long as possible. They're loaded now. So they're looking for this final wave to come in, and then they can sell into that. I think this cycle is going to be a lot different. I've said that for many moons now, for reasons that, we're going to be dealing with a different macro environment going forward than we have in the past. Crypto's never had a recession. So I say enjoy what's coming, because you're going to have to gird your loins after this move is done. And don't think Bitcoin can't go down to like X level, because it does. It goes wherever you think it's not going to go. That's where it's going to go. If you don't think it's going to hit 150K before next couple of months, well, guess what? It certainly can. Why? Because it's by nature, it's in a liquid vehicle. It doesn't take a ton of demand to drive prices extremely high. And there's a lot of leverage. There's a lot of casino players in this thing. So that sort of effect can compound. And then it's same way on the downside too. You can have massive liquidations. We're seeing funding rates are starting to get elevated in the derivatives markets overseas for Bitcoin. That's a telltale sign that you're probably in the 8th or 9th inning of a move. It can continue for a couple, 3 more weeks too, like that. But then you're going to start seeing really extreme funding rates. And that's usually when you're going to get like a quick 50% drop. And when I say 50% drop, I just mean from this current move up, not the entire move from the lows. And so what does that mean? Maybe we run up to like 70 something K and then we pull back to 50K or something like that. Expect that sort of movement going forward. And then we'll have some kind of finale move as we approach June, I believe. But everything in that scenario, basically Bitcoin's doing all the right things here. So I don't see any reason to believe that any of these fib targets that you have on here won't be hit.
Yeah, and Bitcoin's not the only one. You know, it's in it because Bitcoin's your baby, energy's mine. And if we would flip to these next charts here, is you know, ExxonMobil is my family's biggest position, and you know, we use a very comprehensive strategy, you know, to maintain, I guess, asset, you know, allocation and also money that we take out to live on. And right now we're at a point where if you look at, and just obviously to guys here, Bitcoin, I didn't put the worm on here. This is the worm on ExxonMobil. And if you guys want to be long swing traders, set your charts to weekly, buy a subscription, get the worm, and then buy whenever you see that worm changing color, and you'll make a lot of money. Okay. And we have promo codes right now if you want to get it. Just go trailingagenius.com. Thank us later because the first couple trades will probably pay for 10 years worth of the service. So ExxonMobil now is cycling back up again, and it's going on a shorter time frame, banging its head up against resistance here, but it's eaten through it. And I think there's going to do an assault on the highs here. It got up to around the 120 area. So keep an eye on ExxonMobil. And that to me is a proxy for basically all other energy on the oil side. On the natural gas side, here's one that's setting up for you. So here's EQT on a weekly. Okay. And check out the last time the worm turned on a weekly. I mean, these are 20-25% moves, guys. And natural gas is setting up for a March, April lift. And you're starting to see money coming in. You know, we broke down, we did the peekaboo low, scare the children move, and now we're starting to see moves up higher in natural gas. Devon Energy is also moving. And so there's a couple natural gas plays you can sit and you just can sit on this thing. So I'm looking at EQT 39, then coming up to the gray area, that's resistance. And that's what I'm looking for EQT. So Phil, we're lining up perfectly here for what I would call the great rotation into energy. You know, it's ironic. We had this in 2000 and 2001 too, when tech started to collapse and energy picked up. Oil and uranium were beautiful moves 2002 to 2006. And I think that's what we're going to see now. I think they're going to put tech on the shelf, and then people are going to go for hard assets. Bitcoin's the ultimate hard asset because it's, you know, liquidity sink, and it's also non-correlated to banking, and it's also rare. And so it's a place where people, they can hide out and let other people FOMO themselves into some higher profit. So I think this is the area that you have to look at. Maybe 3 months from now, maybe ES is up another 1,000 points on SPY, whatever. But these moves here could be 25-30%, where the indexes may move up another 5 to 10%. So that's kind of my move. And I think, you know, NVIDIA and SMCI and the AI stocks, they may not go anywhere, Phil. When money starts to move out and the casino goes across the street, the tour bus moved away from MGM and is heading to Circus here for the final hurrah.
Yeah, you're right. And you see that a lot in crypto too. You'll have Bitcoin make a move as it's doing now, and all of the BC related pairs get pummeled as it's happening. And then it's going to find a range to hang out in, and then you'll see those alts catch up. So same principle. And I think you're absolutely right. Guys, let us know what you guys think of this podcast. We appreciate all the views. And like Bob said, check out our stuff over at tradegenius.co. This is a great swing trading indicator. And if you're more active and want to be in the room with us, we would be more than happy to see you in there. Check out the specials over at tradegenius.co. Thanks, Bob. Thank you guys. And we'll see you guys on tomorrow's video. Take care.
Trade Genius.